Hopes for lower interest rates and resilient growth in 2024 took the S&P 500 to a record high on Friday after two roller coaster years featuring soaring inflation, tumult in the banking system and economic unease. The benchmark index ended on Friday at 4,839.81, which was above its prior closing high of 4,796.56 set on Jan 3rd, 2022. During the session, it also hit a record intraday high of 4,842.07. Now, the new closing record confirmed that the S&P 500 has been in a bull market since October 2022 by one widely used definition. Stocks began wobbling in early 2022 on worries that surging consumer prices inflation would force the Fed to raise interest rates. The central bank's monetary tightening cycle turned out to be its most aggressive in decades, boosting Treasury yields to 16-year highs and battering stocks. The index slumped as much as 25% from its peak, hitting its bottom for the cycle in October of 2022. A sharp rally came in the latter months of 2023 as evidence that inflation was decisively cooling, and a dovish message from the Fed helped drive stocks higher. The S&P 500 ended 2023 with a 24% increase and has moved modestly higher in a bumpy start to 2024. Surging shares of big technology companies and optimism over artificial intelligence, factors that have driven stocks higher for the past year, powered gains once more on Friday. The interplay between stocks and Treasury yields has been a key driver of market moves over the last 2 years. Now, yields soared as the Fed began hiking interest rates to fight inflation and eventually hit a 16-year high in October 2023 as fiscal worries also exacerbated a sell-off in U.S. government bonds. Yields, which rise when bond prices fall, create investment competition to stocks while raising the cost of borrowing for companies and consumers. Expectations for rate cuts in 2024 have pulled yields lower in recent months, so with the benchmark 10-year Treasury yield recently at around 4.2% after breaching 5% in October. So far, the U.S. economy has proven resilient, with recent reports showing strength in areas such as retail sales and consumer sentiment. The S&P 500's forward price to earnings ratio is now hovering near 20 times and is well above its historical average of 15.6 times, according to reports. But analysts are still upbeat about the index return potential as they think other stocks will now see some buying, which could pull the index up higher.